Okay, welcome to the channel. Happy New Year. Ebro Trades here. I've uh, I've actually taken a break from the charts for the past 2 weeks or so, um, and I'm coming back to trading with a new strategy that is a more advanced version of the accumulation, manipulation, distribution strategy that I outlined in my last video. Now, as you all know, 95% of candles on the charts do something like this. There's an accumulation phase, there's a manipulation phase or a fake out, and then there is a distribution phase where price reverses in the opposite direction. So something along these lines, right? And vice versa. It could look something like this: accumulation phase, then fake out or manipulation phase, then a distribution phase where price reverses. Another word for this is Wyckoff. Go watch my Wyckoff video if you want to sort of expand on that. But essentially, market follows three, all candle or 95% of candles are exhibiting one of three behaviors: either accumulation, which is sideways motion, manipulation, which is essentially collecting liquidity at stop losses, set at stop losses, and then distribution, which is an expansionary move towards the opposite direction. Now, a lot of you understand that the market has these three stages, but what a lot of people struggle with is okay, let's say that this is accumulation, right? So sideways. Then this is our manipulation. So this is our fake out, or essentially the market is tricking people into thinking we are now going bullish. And then this is our distribution. So the market then reverses. Oh my days, why is this doing this? Then the market reverses in the opposite direction. So it does this thing. And a lot of people get stopped out in that manipulation. Now, how do you time your entry such that you catch the distribution phase? How do you know when the manipulation phase is ended? So that's the question that we are answering using this method. How do we know when manipulation has ended and distribution has started? AKA, how do we time our entry for the accumulation, manipulation, distribution method? Some call it the ICT Power of Three. Some call it accumulation, manipulation, distribution method. I've called it the box method in the past, but how do we time our entry? How do we ensure that we are not going to get caught out in the fake out portion of the cycle? Now, I want you guys to really look in. I want you guys to really look in because I'm really going to give away some secrets in this video. Now, the first thing we're going to do is we are going to start on the daily time frame. So let's say we have these candles, right? So let's say we have these candles. Okay, so we've got this candle, and this is the candle from 2 days ago. So imagine we are on today. This is the candle from 2 days ago. This is the candle from yesterday. What does this tell us about the bias for today? Now remember that we can never find the bias to a degree of 100% accuracy, but we can find a highly probable bias for today. So let's say that this candle is 2 days ago. Let's say this candle is yesterday. How do we figure out our bias for today based on the last 2 days candles? Well, if yesterday's candle closes above the high of the candle from 2 days ago. So this is the high of the candle from 2 days ago. If yesterday's candle closes above the high from the candle of 2 days ago, then our bias for today is bullish. So we are expecting today's candle to be a green candle. Okay, hope that makes sense. On the other hand, if the candle from yesterday closes beneath the low, beneath the low, the high, of the candle from 2 days ago, then our bias for today is bearish. Simple as. Let me repeat that one more time. If our candle from yesterday closes beneath the high of the candle from 2 days ago, then our bias for today is bearish. And so for today, we are expecting a red candle and vice versa. Now, I want you guys to, if you're confused, rewatch the segment that I just covered. Rewatch that segment and write it down. So that's how we are establishing our bias for today. Now, we've now established our bias on the daily time frame. Now what? Okay, so what we're going to do is we are then going to mark out the open. So let's say that we have this situation where yesterday's candle closed beneath the high of the candle from 2 days ago. Our bias for today is bearish. What are we going to do? Step one, we are going to mark out the open of today's candle. We're going to mark out the open like so. So remember, this is a bearish candle. So this candle right here is a red candle. We're going to mark out the open of today's candle. And we are going to look. So let's get rid of all of this now. Let's get rid of all of this stuff. So we've established our bias for today. We've established that there is a high probability that it is going to be a red candle. Now what? We are going to mark out the open of today's candle on the daily time frame. We are then going to switch to the 15-minute time frame. So from the daily time frame, we are going to switch to the 15-minute time frame. On the 15-minute time frame, we are going to look for highs on the 15-minute time frame just before the open of today's candle. So we're going to look for prominent highs on the 15-minute time frame prior to the open of today's candle. So this is going to be on yesterday's price action on the 15-minute. I'm going to mark out prominent highs. So I see I've got a high here. I've got a high here. Then what am I going to do? Okay, I'm now on the 15-minute time frame, right? This is my daily candle. I'm on the 15-minute time frame though. So on the so I'm going to use this line here to mark out the fact that we've now started today. On today's price action, I'm going to see that price does something like this. So price is going to do something like this. It's going to go all over the place, but then it's going to sweep one or more of these highs on the 15-minute time frame before showing me a market structure shift to the downside with a potential PD array and continuing in the distribution phase. So what is the beauty of this? I have now managed to isolate the manipulation of my price action by marking out the highs on the 15-minute of yesterday's price action just prior to the opening of today's candle. So this is going to be the manipulation. I'm then going to catch my entry, retracement into an order block, retracement into a fair value gap, plus market structure shift, any of ICT's entry models. Go watch my other videos for entry models. And essentially, we're going to catch the short moving down here. Now, this is going to make so much more sense with an example. I've actually got two examples prepared for you guys. So let me quickly recap what I've just said. So we're going to use two time frames, right? We're going to use two time frames. Just make sure I'm recording. We are going to use two time frames. The daily and the 15-minute. On the daily time frame, we will examine the last three candles, including today's candle, where candle 3 is today. If candle 1 is bullish and candle 2 fails to close above the top wick of candle 2, so if candle 1 is bullish and candle 2 fails to close above the top wick of candle 1, it's a typo, then my bias for candle 3 is bearish, and vice versa also applies. Now, once we've established the bias using the past 2 days candles, we mark out the opening price of today's candles, so at the open. Now, to figure out where the manipulation phase ends, or what the manipulation is targeting, we look to the left of the today candle on the 15-minute and find a significant liquidity level. We wait for a sweep of that liquidity level as was shown here. And then we wait for a market structure shift and a PD array to form, retracement into the PD array, and then that is your entry. Now, if the bias for today was bullish, that entry is going to be for a long. If the bias today was bearish, the entry for today is going to be a short. How frequently will you catch this trade? Once to 3 times per week. It will not present itself every day, simply because your bias will not be accurate every single day using this method for projecting the bias. But trust me, if you are someone that is looking for accumulation, manipulation, distribution trades, the edge that this provides is insane. Is just insane. The win rate for this, when it presents itself, is like 75%. So let's quickly get into example one. Let me get rid of all of this stuff over here, just to not confuse you guys. And remember, if you're a fast learner, watch on 2x speed. Also, quick note, my trading academy is linked in the description. If you need, if you're struggling with profitability, I've been profitable for the past 3 years or so, is how I make my income. So I highly recommend you click that link and sign up and stop wasting your time. It's 2025. Don't waste another year staring at videos from 1,000 different people on YouTube and not getting anywhere. I've got a structured course there, beginning, middle, end, covering everything from my beginner topics, intermediate topics, advanced topics, which are literally the strategies I use right now. I also do a one-to-one weekly call with every single member in the academy where I go over anything you want to go over. We go over the mistakes you're making, your setups, your strategies, your risk, if you've got a prop firm challenge, where you are with that prop firm challenge, what you're struggling with, what you need help with. Essentially, I provide you a curriculum or a pathway to becoming a profitable trader. Don't waste your time just sitting around on YouTube. Check that out. If you need help, if you're not profitable, check it out. Now, let's get into the example. So, this is for Tuesday, the 7th of January, 2025. Right? Tuesday, the 7th of January, 2025. Let's go to the daily time frame. And the trade was taken on the Tuesday. Okay, so let's quickly go to the daily time frame. So on the daily time frame, okay, we're on the daily time frame. Let's get rid of this. Move this over here. Okay. So first thing we need to do is turn off this indicator. First thing we need to do, I want you guys to concentrate with me right now. First thing we need to do. So this is a trade we took on Tuesday. So first thing we need to do is find our bias for Tuesday. How did we find our bias for Tuesday? Well, Monday was a bullish, Friday was a bullish candle. Monday failed to close above the high of Friday. Monday, again, failed to close above the high of Friday. Therefore, our projection for Tuesday is that Tuesday is going to be a bearish candle. Okay, we have now established that the trade we are looking for is a short, which means that accumulation, manipulation, distribution, the distribution is going to be bearish, the manipulation is going to be bullish. Perfect. Now, let's come down to the 15-minute time frame. We're on the 15-minute time frame. Let's go to the 15-minute time frame for Tuesday, 7th of January. We're going to mark out the open for Tuesday, which is somewhere around 0000. So the open for Tuesday is roughly somewhere around here. Okay, so this is the open for price action on Tuesday. It's somewhere around here. It doesn't matter. It's somewhere around here. Okay, so this is the open for Tuesday. On the 15-minute, I'm going to look for significant highs to the left of this opening over here. So to the left of this line over here. So if this is my open for Tuesday, I am looking for highs to the left. Now, the most significant high I see is this level over here because it was also in conjunction with a fair value gap. There's also a fair value gap over here. So this looks like a promising region which price could retrace into and sweep this liquidity. So I've marked out my high. Now, what does price do? This is a trade I took, by the way. So what does price do? Get rid of all of this stuff. So what does price do? Price has the accumulation phase. It manipulates up towards this liquidity level, sweeps the liquidity level, before coming down into distribution. Now, as soon as this liquidity level is swept and I see price exhibiting massive bearish movements down, I know distribution has started. My entry, I look for an order block. Do I see an order block prior to this massive bearish move down? It's this blue candle over here. You could use an order block. You could use a fair value gap. You could even use the fact that just there is a market structure shift with significant bearish motion. Is there a retracement into this order block? Yes, there is. I am entering off the retracement into the order block. My stop loss just outside the order block, targeting 1 to 2 for my first TP. So somewhere around here for my first TP. Do I hit TP1? Yes. Where do I set my second TP? I set my second TP at 1 to 4. Do I hit TP2? Yes, also. And it is as simple as that. By the way, you could have extended this trade all the way down to 1 to 4.75 TP. That is it. So, found out my daily bias, marked out, switched down to the 15-minute time frame from the daily time frame, marked out a significant liquidity level, which is bullish, to the left of my open time for today's candle, waited for manipulation, which essentially is a sweep, a bullish sweep of this liquidity level. And I knew that as soon as that happened, we're out of manipulation, we're into distribution, and I'm now literally just looking for an entry for the trade. In this case, I entered off retracement into the order block. Now, it's quite a confusing strategy. This strategy is not suitable for beginners, simply because there is a lot of moving parts. But for my advanced traders, this strategy is so beautiful. It's so beautiful. I do it primarily on futures and on so basically indices. I haven't backtested it on Forex, but take this and backtest it and run with it. And let me know in your comments what your win rates are. Again, Ebro Trades Academy is open right now. What does the Ebro Trades Academy portray? Lecture style videos covering beginners, intermediates, and advanced my current day trading strategies. We got a weekly trading session every week, live streamed. 1-to-1 weekly call with every single member once a week. Oh my days, it's just invaluable, bro. Serious. Don't waste your time sitting around on YouTube. Like, I'm literally offering up everything I know to help you get profitable within the Ebro Trades Academy. So check it out. Sign up. It's been fully booked up for like the past 6 weeks. But if places have opened, that will be in the description. If not, there's a waiting list there. Fill out your details. Hope you enjoyed this video. I've also got another example here, but I don't want this video to go on for too long. If you want me to make a part 2 with more examples, let me know in the comments. Please like, subscribe, and yeah, peace.